if you cut your losses early and you let your winners run, and you try to find those asymmetric bets, you could even win 40% of the time. You can lose on most of your trades and still make money. The key is like finding those asymmetric opportunities, which is kind of what that tariff moment was. It was a very asymmetric moment to shove in your chips.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show.
Welcome back to another 1000X podcast. It has been a fun week. I was 100% wrong with my previous call of range. I thought that we were going to get some. Consolidation for a bit. Turns out everything just decided to rip up like massively. ETH BTC sort of the huge winner here that everyone's been talking about. I think like my personal take is still what it was before. I think on the last podcast, I didn't expect it to happen so fast, but on the last podcast, I said, there's some perpetual shorts in the market. You just have to wait for them to rip, anywhere from 20 to 60%, depending on the asset. I gave a target of 20 to 25% for ETH BTC to rip before you start shorting it again. And guess what? It's now up 32%. So, I think with these types of moves, you kind of have to wait for a period of side, like after something rockets higher really quick, you have to wait for a little bit of sideways and a little bit of weakness and then attack the weakness. So that's a little bit of what I'm waiting for right now. ETH BTC still looks okay, actually. People were just giga short the asset. It's been very strong. I don't know, Jonah, what are you thinking?
Avi, I'm trying to decide if we are so back. Like crypto, I did not expect this either. I'm positioned for it, which is nice, but it's an unexpected surprise. I was sort of mentally preparing myself for another drawdown and maybe another month or three of just like painful sideways chop. But we just gassed higher, and it's not entirely clear why. I still think that ETH is a flaming pile of crap. I do think that it is a good short, but given my experiences attempting to catch falling knives in crypto, so basically do the opposite of what you just described, like something just pukes and then buy it. I've had such bad experiences doing that I would be afraid to do the opposite and short ETH BTC on like this crazy rally that it just had. I mean, obviously, I agree with it. Basically, that's a long-winded way of saying I agree with your take that we should kind of wait for it to go sideways and stabilize a little bit before getting short. It's kind of in price discovery mode with that pair. But if you zoom out and you look at like the really long-term chart, I mean, this friggin' thing has gone down in a straight line from 0.085 to 0.019, like pretty much down only, with a couple of like short squeeze rallies in December of 23 and May of 24. So, if the thing's trading 0.024 on a historical long-term context, it's still basically on the lows, right? Like maybe not the dead ball absolute pico lows, but it's on the lows. So yeah, I think like with respect to shorting ETH versus Bitcoin, just wait for the price discovery to end, wait for people to stop, covering their shorts or trying to get long this thing. And then you probably get short again. Because I know there's this narrative bubbling in the background about ETH about like, oh, the institutions are finally coming, TradFi, BlackRock, blah, blah, blah. I don't see how any of that really accretes value to ETH holders, Like, I think all of the activity is going to be on base. I guess maybe a few new ETH wallets get opened and some ETH gets bought to fund those wallets. Is that really enough? Like, that's what I'm debating mentally. ETH just seems kind of radioactive to me. And I think that other chains will continue to proliferate and dominate the L1 space. I posted takes like that on Twitter just to sort of stress test the idea. And there is a, really committed community of ETH maximalists, maybe you call it, aficionados who are finally feeling like they've had their moment in the sun, and it's their time to shine. And they're very upset that people out there could possibly believe that ETH won't perform over the long run. But I'm still a massive skeptic. Ever since you kind of talked me out of my bags last summer, I'm just wondering what's the impetus to get back in? Is ETH even a good business? Is Base going to result in this, massive multi-hundred-billion-dollar asset, returning decent yield to investors? Like, I think the price is still just too damn high. What do you think? You're on mute.
I think long term, it's still fucked. I mean, this is clearly like from a trader's perspective. You always have to pick your spots, and you have to be careful, especially if you're going to be shorting crypto assets, as you can see with ETH. I think one thing that was very clear is just how many people were short this asset as an alt pair. Um, like I think that when ETH was rallying, there were actually like when it had like that massive move up, it was outperforming so many different alts, and that's actually quite rare. And I think a portion of that is because like people were long Hyperliquid and short ETH, and people were long Pendle and short ETH, and people were long all these like other random things and short ETH. And I think a ton of them just had to cover those. A ton of those people had to cover those positions, and that ended up cascading into what we see today. And then obviously in crypto, price is fundamentals in many ways. Not legitimately fundamentals, but it's what drives people to buy an asset, right? If you have momentum off the lows from an asset that's been lagging for more than a year at this point, you get a lot of people chasing that move. Now, once all of the shorts are completely cleared out, of which I don't think we're actually done with that clearing yet, and the momentum buyers and ETH kind of stops going up for 2 to 3 days, I think you see like pretty radical reversal in ETH BTC. Now, whether that's maybe we have like another 20% to go before that happens, but basically what you should be watching for is like 2 to 3 days of red candles from ETH, and then you can start to attack it a little bit, and then you're like, okay, back to like we're back, short squeeze over, repositioning over, because the reality is the fundamentals have not changed. Like usage is going everywhere else but ETH right now, and
Yeah.
that to me signals okay, time to like there will be a time to short. Now, if we saw tremendous amount of usage cropping up on ETH, and we saw a lot of new people, dropping projects on ETH, and hell, if we even saw MSTR competitors surrounding ETH, what's funny is like we're seeing all these MSTR competitors pop up. We saw one for Solana, we saw one for Tau come up. Where's the one for ETH? I think it's probably it's like at some point it's going to come, but like I just think people realize there's just not that much appetite.
Yeah.
You know,
I mean, have you used ETH recently? Like I received some Tether on ETH recently, and then just like sending it to a centralized exchange to go buy some crypto with it. Like I ended up spending $1 of the Tether, and I'm like, this isn't the point of crypto. I know I'm like
no,
beating a very dead horse here, but like back in the day, it was so new and cool, and wow, world computer, like programmable money. Now I'm just like, the space has just moved on, and this tech hasn't. And bridging between ETH and the various L2s, like to trade on Hyperliquid, which I would never do because I live in the United States. You've got to bridge your ETH from mainnet to Arbitrum to do anything interesting on Aerodrome, or for a while there was a meme season on Base, like you had to bridge to Base. Bridging, yeah, there's like the Across protocol. There are all these other random sites that may or may not be trustworthy. the best bridge is always a centralized exchange, right? Like that's really the best gateway to get from an L1 to an L2. I don't care what anybody else says like about on-chain bridging. I personally am going to trust Coinbase, Kraken, or Bybit or OKX way more than I'm going to trust bridgefart.xyz to bridge like real size. And honestly, that defeats the purpose, right? If you're trading on chain or you're doing something on chain, it's supposed to be on chain. It's not supposed to go through a centralized exchange. I don't I was late to this opinion, but I just don't believe in the architecture anymore. And I don't believe that like a million people, million new users coming onto base really results in a higher ETH price. I would if the FDV of ETH was like $10 billion or $20 billion, like Hyperliquid, but certainly not at these prices. So, I completely agree with your take. I think like tread with extreme caution around ETH.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
Solana's looking interesting. Hyperliquid's looking interesting. I mean, I think we might finally be in the midst of an alt season. What do you think?
Oh, I mean, look at pricing, dude. I mean,
Yeah,
virtual's 5x or sorry 4x since the lows.
yeah, it's
5x
nuts.
actually.
I
It's
mean, the
we're
the lows. Just one point on that though. You never buy the lows. Like you can be long on the lows if you've gotten daddied all the way down from the top, but I think it's a little bit. I see a lot of this on Twitter. People are like, oh my God, this thing like 10x from the lows. Like nobody bought the lows. That's why they were the lows. Like it just like one in a million chance you actually bottom ticked it.
but what I think what's key is that there has been even sustained performance. Like it doubled off the lows and then doubled again, right?
Yeah, yeah,
And plenty of people bought the double after the
yeah.
lows. That's why it doubled.
True.
And so it's what I'm saying is that there has been a lot of opportunity. I mean, AI coins have actually done reasonably well. Tau leading the charge. I mean, like things like AI 16Z 4x off the lows, AI XBT 3x off the lows, which we're coming for. AI XBT is about to get flipped by 1000x.
Yeah.
The terminal's coming very soon. So just keep an eye out, guys. I think you guys are going to absolutely love this product.
We've got our
things like
beta demo
Cerebro have
live.
done well.
Yeah.
Yeah.
Yeah, I don't understand why. Like, I would not have expected that. I thought Virtuals was going to be one of those projects that was like, you know, what's the line in Tropic Thunder? A white, like a white dwarf that got consumed by a black hole, something that just blew up for like 10 seconds and then imploded on itself. I thought it was going to just be like an extreme, basically what happened to H bar in Fast Forward. Like it kind of like ripped. Everybody thought that sort of like no code agent platforms were the future, then it just tanked in a straight line. I thought it was dead. I thought it was over. I was ready to like
Yeah,
mentally
I
write
think
it
basically
off.
what happened is just like people people were up so much on these positions that they just like once it started getting a little wobbly in terms of usage and narrative, all these people were just exiting because virtuals had an insane run. I mean,
Yeah.
the average cost basis on a virtuals positions had to have basically been like zero for most people relative to current pricing, and that to me is always a very dangerous sign. Now it's a lot healthier, right? Like
Yeah.
the average cost basis of all of these AI protocols of the people that hold them, it's so much lower than it was before, which gives it a lot more room to run.
Yeah, that's a good point. I guess on Bitcoin, you can actually track it. There's like,
Yeah,
you know, all these different metrics on CoinGlass that you can use to see what the average like entry price is. And I wonder if there's a tool out there where you could see that for other chains. I don't really know exactly how Virtual's blockchain works, but yeah, that would be a good thing to track. Maybe that's like for an enterprising listener, maybe that would be a cool dashboard to build, is like the average entry price or average long-term or short-term holder price for all these different coins. And yeah, that's your heuristic of like, hey, is the long-term entry price far below current levels or kind of at or holders underwater? That's probably a good price signal in a rapidly appreciating market like this one. um, I think you're right. Like that those markets have to be healthier. Also, I don't even know what half of these other AI coins do. Like Cerebro is the most confusing one of them all to me. I never really looked into that one, but I I guess we're in like just broadly speaking, we're now at the point in the bull market where there's going to be a temptation to FOMO into projects that you don't really understand, projects that are rallying quickly, that have a lot of narrative and hype, but you don't really, kind of understand why.
mhm.
I'm after having been through a few of these by now, I'm kind of doing my best to avoid FOMOing into stuff like Tau, for example. I kind of missed that one. I still don't really fully understand
That's
it.
okay.
It's
I think Tau is a trade, right?
yeah,
And as kind of all of these things are, they're trades, right? At the end of the day, they are
yeah,
okay. Well, what is the narrative flavor of the moment, right? Um,
yeah.
One thing that's done really well that we've talked about previously is if you followed our not financial advice and you accumulated some of the RWA assets we've been talking about over the last month. I mean, RWA has done extremely well over the last month. If you look on, I mean, Pendle is up 60%. Curve has done very well. Also up about 60%. Syrup, which is Maple, which we've talked about, is 2.5x up over the last month. I do think that you know what I'm seeing today in the markets is I'm seeing a convergence between TradFi and crypto that I have not seen. Like I've not seen anything like this ever, and that's just by virtue of the regulations being decreased. I mean, people are moving with full force, and it's not just these MSTR structurings. Um, I mean, I don't know if you saw like this Nakamoto thing that just went live by David Bailey, or the SPAC that Republic just launched. There are a lot of like traditional companies that are sort of reversing back into crypto. They're doing like these weird little reverse mergers, or they're saying we're going to diversify into Bitcoin Treasury. Um, like there's emerging that's happening right now that I think RWAs are primed to capture. Like trading AI coins is kind of just trading the beta of the market. And when it comes to alts, it's like, okay, well, when I think that the market feels safe, like Bitcoin over 100K, let me just go buy these scam assets. But RWAs feel like something I can like allocate to and have 10% of my portfolio and I just wait.
I agree. You mentioned Syrup, well, Maple Finance. I was looking into that project, and forgive me if my numbers are stale. I'm on a weak internet connection, so I don't want to open up other tabs and jeopardize this video call. But I was looking into it, and if memory serves, the market cap is what's the market cap? Roughly 300 million FTV ish of
Of
Syrup.
syrup now.
Yeah.
Let me just, oh, yeah, 300 mil.
Okay, so 300 mil. See, okay, like you said, there are two
Wait,
trades to do
so
right now.
yeah, go ahead.
Trade number one is narrative. Like, okay, alt season, let's just see what's about to pop off. Let's be in the Discords, let's watch the Telegram channels, let's be all over Twitter and see what coins are gonna get talked about the most and try to buy some on hype. Not Hyperliquid, just hype. And then the other trade is like, hey, are there actual real businesses going on, like we've discussed in previous episodes of this podcast, that I can buy into at a decent valuation? And as far as that second narrative goes, Maple is extremely interesting. Like, it's the market cap is $300 million. If you go on DeFi Llama and sort by 7-day revenue, it's like, I mean, I think it's like number 12 or 13 in the world right now. It's earning $2 million a week. And uh, the, okay, so that's $104 million a year if you annualize it and assume it just doesn't grow. So the PE of this thing, the price to earnings ratio, is 3, like 3.0, which is, Hyperliquid, I think it's 50. So to me, like, while you're talking about this emerging convergence between TradFi and crypto, if we're going to do some TradFi analysis on interesting crypto businesses that earn money, Maple is like number one on my list. I'm accumulating some of that one now. Um, you know, in light of recent conversations, I think it is. I think that one's very exciting.
I do want to be fair when it comes to statistics. So they're making $30 million annualized in fees. And their annual operational expenses, according to DeFi Llama, are $8 million. So let's say they make $20 million a year. That's a 15x PE, which still is
I
like,
thought it was $2 million a week.
I'm seeing 30 million annualized.
Okay,
The 30,
so maybe
the 30 day fees are 2 million. Maybe
Oh,
there's
okay.
some.
So I misspoke. Good. Thank you for correcting me. But still, pretty ridiculous.
However, 15x is still pretty damn good.
Yeah. I mean, I think the benchmark for
if you look at TVL, dude, TVL literally 5x in the last 3 months. I mean, like, it's, it has not been the best performer off the lows. It has lagged some AI coins. With all of that said, like, I can sleep through the volatility of something like that. Like, if AI coins go down 15% in one day, I go, okay, I'm fucked. Let me get out of this thing. Like, I can't hold that.
Yeah.
like AI XBT, like, I don't fucking know. I'm not holding this thing. I'm not holding AI 16Z if it's down. I'm trying to catch the momentum on it. Whereas when you look at Maple, I mean, so yeah, like this is what I get excited about in crypto. It's projects like Maple I get very excited about, because real revenues, it's like we'll add it to the bucket of my hype pen. I mean, we talked about it before. We're just going deeper today. The hype pendle syrup plume. Oh, plume is kind of I'm hoping that it'll get there. It's not quite there yet, but these things that have a real path to generating revenue are good, and you can hold through them. With that being said, obviously, like, trade the other stuff. I mean, at some point, let me just pull it up. Like, at some point, these are going to be phenomenal shorts. I'm not exactly sure when yet, but basically the best way to do this is just once they start breaking below some like shorter term moving averages.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $50,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. WalletConnect is the connectivity network shaping the future of on-chain UX. If you've connected to a Web3 app, you've seen WalletConnect, an icon of trust in crypto, as recognizable as Visa at checkout. From DeFi to NFTs, swaps to staking, WalletConnect is the backbone of connectivity in the on-chain economy, seamlessly bridging wallets, apps, and blockchains. Over 250 million connections and 40 million users worldwide have trusted WalletConnect. And now, with the launch of the WalletConnect token, the network is taking the next step, paving the way for a fully decentralized, permissionless, and community-owned future of connectivity. Want to learn more? Follow at WalletConnect on X and Telegram, or visit walletconnect.network to stay ahead of what's next.
Let's have a little fun with some charting here. We'll go look at WorldCoin, and we see here. Okay, WorldCoin's now at 126. Where this is going to be a phenomenal short. Everybody has to short WorldCoin because it's going back to the lows at some point. The question is, how do you short it without losing your shirt? And here I'm gonna throw on a 90-day moving average. We'll do a 30-day moving average. So it just crossed above the 30-day exponential moving average. It had a touch point at 76, it had a touch point at 90, and now it's far above. At some point, that moving average is going to catch up to WorldCoin, and then it's going to start to go below that moving average. And then once it goes below that moving average is when you can actually short it. Right now, the moving average is at $1. So if we trade, let's say in the next 30 days, that moving average comes up to 120 and WorldCoin breaks below 120 and you see that match, okay, go ahead, short it. Basically, just find where it has lost momentum and just short the hell out of it. Because these things bounce because they've been so heavily shorted. And you don't want to be one of those guys that's like caught shorting the lows and then it comes up against you and then you're like, okay, I'm fucked. Because those guys can get blown out. But once all of those people are blown out, then the only people that are left and the momentum buyers have stopped buying because the market's sort of not pushing forward as strongly anymore. Then all the sellers come that get like $30-40 million of WorldCoin a month, and they're going to push this thing back to the lows. Say is another great example. Move is another great example. I mean, just like have a list of all of these coins. Like whenever you're thinking, okay, I should probably sell some Bitcoin. Like, let me go sell some Bitcoin. No, just sell these things against Bitcoin.
Exactly. I think that
using my little framework.
I think it's a great framework, and I think it helped me during the previous round of chop to reduce exposure to crypto as a whole by shorting things that I thought were crappy instead of selling the things that I believe in long term. Like we're never going to time in the market beats timing the market. And truer words have never been spoken about an asset like Bitcoin. We both believe that it's going to the moon over the next 5-10 years. It's hard to dance between the raindrops and try to trade Bitcoin super actively and beat the robots on that one. But yeah, there are definitely times where crypto as a whole looks shaky and prices look extended. And I agree. I think especially now, we're past the 2017 and 21 cycles where everything pumps regardless of how stupid it is. This time, like, yes, certain stupid things will pump. Yes, fart coin will go up probably, but like WorldCoin, let's say we get to the point where you just described, Avi, where you said like the shorts have been squeezed out, the FOMO buyers have bought WorldCoin, and WorldCoin is like sitting on local highs. Like, let me just articulate the ridiculousness of the thesis that needs to play out in order for WorldCoin to go higher after it's been short squeezed. And by higher, I mean outperform broader crypto. The lizard Illuminati people literally need to force us to scan our eyeballs. That is what you're betting on. You're betting on like some totalitarian like Fahrenheit 451 outcome that's so absurd that even speaking it makes me feel like I don't know whether to laugh or cry. Like it's so, again, I'm just going to say it again. In order for WorldCoin to go up from short squeeze valuations, you need people to feel compelled to scan their eyeballs into a giant orb. I definitely think that's a short. It's not going to happen. It's just not going to happen. So yeah, I totally agree with that short. RWAs, that's a way better bet than ETH. Why? Because Syrup is worth $300 million and ETH is worth hundreds of billions. Like it's just check the price before you buy is kind of how to play this alt season, I think. And then beyond that, like I don't know, should we touch on macro? I'm macro's
Yeah,
starting
I
to look
mean,
a little
dude,
bit
stocks
bizarre.
stocks are almost at the highs
Yeah.
now. I mean, we're like like 5-6% off the highs. Things are looking. I mean, things are looking pretty fucking good, actually.
Yeah. Nobody gave
In
the Donald
aggregate.
any grace. I felt like I was the old, or maybe you and I were, two of like a very limited number of people who didn't immediately come out publicly saying like, we're convinced that these tariffs are terrible for, and that American exceptionalism is done. Like the whole world was just so convinced that everything was going to go straight to zero. It didn't feel like a very difficult contrarian bet at the time. I could like Trump. I continue to believe he's going to pump our bags. You're on mute, by the way.
Do you remember when we were saying, screaming, "It's time to buy hand over fist"?
Yes,
Like
the
we,
VIX is at
it's like
60. Just buy.
when the VIX is just fucking buy hand over fist, like shove in, like don't be a pussy, just buy this thing. That's what we
Yeah.
were screaming. I mean, the one thing that I'll say, like I could have, so I did. I basically after Liberation Day let go of all my equities, as you know, and then I bought like substantially on that crazy liquidation day when everything was down and gold was down and equities were down, and then I wrote it back up until it reached the like level right before the major breakdown. So basically wrote it back up to four. Like if I'm looking at the Qs, I'm looking at 485, like that level.
Yep.
When it kind of went sideways in March before the Liberation Day just puked it all. That's kind of what I was. I offloaded basically everything around there. And when I said that Bitcoin was going to be chopping for a bit, I took a lot of. I follow my own advice and basically reduced positions a lot. And so I missed the latest. I missed the latest 6% from Bitcoin and missed the latest 6% from equities, but overall my portfolio is looking healthy. And it's just like I'm telling you guys this on the podcast as a reminder, like you can't ever do anything perfectly. Like it's not like you buy the Pico lows and you sell the Pico tops. I mean, overall, my personal portfolio is outperforming like pretty substantially. However, could I have done better? Absolutely. Did I make the wrong call last week? Absolutely. Right. It's like I saw actually a great clip. I think it was Federer who said he was giving some speech at some college campus. It's either no, yeah, I think it was Federer. Yeah, it was Federer. He goes, you know how many matches, like what percent of matches I've won? 80%. 80%. I still lose 1/5 of all the matches. But in the matches, if you sum up all of the matches
That's so crazy. He's won 80%. That's
well, hold on.
awesome.
But yeah, it's crazy. But if you sum up, like, what percentage of points did I win across all my matches? He goes 54%.
Wow. Okay.
Like that's it.
What a
50,
legend.
50 he won slightly over half of all the points, and he is the GOAT.
What a legend.
So, right? Like don't beat yourself up too much when you have losses, and sometimes a lot of those losses can be strung together. I mean, your goal is basically to win, like 54% of the time, and you can be a GOAT. I mean, it's true in trading too. If you cut your losses early and you let your winners run, and you try to find those asymmetric bets, you could even win 40% of the time. You can lose on most of your trades and still make money. The key is like finding those asymmetric opportunities, which is kind of what that tariff moment was. It was a very asymmetric moment to shove in your chips. Whereas, selling, like the reason that I sold at that 480, 485 level in Qs and that 96 level in BTC is because I didn't see the asymmetry anymore. So I was like, okay, like it could go up 10%, it could go down 10%, but right now I don't have edge in the sense that like I don't see why I should be holding that. Like, why am I holding the same amount today? Actually, more because it went up. Like, why am I exposed the same amount today that I was when the world was collapsing? Right? It didn't really, as a trader, like, it doesn't really make sense. Like, you
Yeah.
shouldn't be doing.
Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com, or hit the link in the description of today's episode to check out their latest wallets.
I mean, it depends on your time frame, right? Like, first of all, I appreciate your honesty. We like to own our L's on the 1000X podcast. We're vulnerable on 1000X podcast. That's what we do here. No trader is right all the time. If you follow people on Twitter who seem to be just only putting on winning trades, they're full of shit, and you're deluding yourself. So yeah, like I mean, my big L of this last month was talking myself into a bullish frenzy about Tau when it was trading $180 a token and not buying a single penny worth of it, because I just couldn't get
Why?
over.
Can we walk through that? Why didn't you
Yeah,
buy?
I mean, I bought Hyperliquid, sitting pretty there, feeling great about that. And then I was like really looking into Tau, and we put out this podcast episode a couple weeks ago called like "Only the Real Businesses Will Survive," and I was just like, I looked inside of Tau and I thought, this this is an incredible ecosystem, right? Like, okay, it basically rewards models that do, I could start I could start Shutterstock on Tau and have the best AI generative model for image gen win a competition and be rewarded with Tau. Like it's a very good, it even kind of like in a secondary or tertiary way kind of rewards distributed compute, which was what Render tried to do. There's a lot of like good ideas and value inside of Tau. The tokenomics are mimic Bitcoin. Everything's very, very interesting. And there's a lot of potential and a lot of really intelligent influencers screaming from the rooftops that Tau is the next Bitcoin. So I looked into it. I looked into a few of the subnets, had some interesting conversations with people who are in the know. And the reason why I didn't buy Avi is because back to the earlier framework that I discussed on this episode, where I was saying like there are VC bets, which are kind of narrative driven. You're betting that a business will develop in the future. And then there are businesses like Hyperliquid, like Pendle, like Maple, that already make money and distribute that money to token holders in the form of buybacks. I was really a lot more comfortable holding the second category. And I'm not a venture capitalist by trade. I'm a trader. And even though I'm okay with narratives, trading, day trading narratives or weekly trading narratives, I just looked at Tau and I thought the reward mechanism inside of Tau isn't dollars. It's just more Tau, like more of this meme coin called Tau. And none of these subnets are generating like real Hyperliquid type money yet, but the valuation is big. It's not like an early stage VC bet. It's like it said it's Series D or E already. Like it's kind of a large cap thing. So, I basically got to this point where I'm like, I've told myself 1,000 times not to buy ecosystems that have no actual revenue and reward activity within that ecosystem with basically newly minted shitcoin. I'm not calling Tau a shitcoin, but like that's, with meme coin or whatever it is. And I just, after mid curving it like that for a while, I just said, you know what? I'm okay if this token goes from 190 to $10,000 a token and I don't make a penny. Like I'll make my money somewhere else, right? Like, and I I want to keep following Tau because I think it's so interesting, but I couldn't get myself comfortable with putting $1 into Tau when I had the opportunity to put money into Hyperliquid at 12. So that's what I did. And I missed out. I could have taken more dollars out of, my checking account or savings account or whatever you call it, and just, basically T-bills for me, and put it into Tau, and I could have been long both and probably achieved similar returns. But ultimately, what you're trading when you're trading Tau is like 4x levered Bitcoin. When you're trading Hyperliquid, you're trading 5x levered Bitcoin. Anybody can go on CoinGecko and denominate their token that they're looking at in terms of BTC or ETH, and see just how similar the two charts are. Like Hyperliquid USD versus Hyperliquid BTC. And if those two charts are trading on top of each other, then you're not really trading the project. You're trading like basically, some X levered Bitcoin. And so I guess that's kind of how I end up feeling okay about missing a trade.
Lot of cope coming from you, Jonah, right now.
Yeah,
Coping
well,
about
you
missing
asked, right?
the generational 2x, or 2.5x from 180 to 450 to over for the non-Tau holders. No, I think that's very fair. I mean, I think that it's a trade that I took personally. Like I did take the trade, but I took it with the mentality of, this is a trade. This is a short term. It looks like there's short term tailwinds for this thing. Let me go buy some and trade it and get out of it. It's not like the syrup or pendle or hype trade where I'm saying I'm sticking in this for like 2 years or like a year or until I see the data change. But and so it's a stylistic thing at the end of the day. It's good. We had some look, we had some W's, we had some L's. We told you guys about them. It's been it's been an interesting week.
Yeah, I mean, do we keep pumping is the question. Like I got that tingly feeling. I think it keeps going. I think that macro is going to drive us.
I don't think so. I think macro. I think we're going to see a decoupling. My like hot take is I think we're going to see a decoupling. Macro is going to go up and BTC is going to come down.
That's a spicy take.
Like so many. I just like I'm seeing a lot of open interest open up on Bitcoin. That's all.
I don't like that. Yeah, fair enough. I mean, I think that basically, I think that people are getting levered long Bitcoin, preparing for like a rip up to 125 or 150. I think that, other people have that tingly feeling too. The reason why I think we're more likely than not to get that in the near term, is because I think the stock market will propel us there. I think the news is only going to get better, not worse. And as we've talked about a million times, it's the second derivative of the news that matters. Like, I don't think that the trade war situation is going to regress into a scenario where suddenly the economy looks like it's going to deglobalize and we're all just going to be like, living in thatched huts, making Nike shoes on shore, which is kind of what the prognostication was a few weeks ago when it was an excellent buy. I think it's just going to be deal after deal after deal that gets announced. I think that the stock market will pump because a bunch of deregulatory measures are about to get announced. I think, there are rumblings now about like eliminating capital gains taxes. Oh my God, what that would do to the stock market. Sick. Oh, all right. Can you imagine?
So you're giga bullish. I'm a little bit more reserved. Let's see what happens over the next week.
Our timeframes are different, right? Like you've been, for very good reasons on a short-term horizon, you've lightened up because, like you said, the risk reward looks much worse here than it did when the VIX was trading at 60, which I fully vibe with. I think that's a very, very prudent decision. I'm still from a number of tokens perspective, I'm as invested as I've been since I bought the lows, because I'm not trading with a week-long perspective. I know that the medium term is my blind spot, and I still deeply believe in higher prices over like a 3 to 6 months time frame. So I'm just like trying to stomach the volatility and not do anything stupid.
I think that's a good note to end on.
Yeah.
Don't do anything stupid.
Guys. That's what you tune in for.
That's exactly what you tune in for. We'll catch you next week.
See you next week. Great seeing you, Avi. Thanks.